Good evening and welcome to this special edition of The Breakdown. We're coming to you tonight from the International Cyber Risk Management Conference here at the Hamilton Princess. Now, the 200 attendees inside have one thing on their mind, and that is cyber crime. By some estimates, it can cost the global economy $6 trillion a year by 2021. But despite that very large number, far too few businesses are properly protected. We're going to head inside and sit down with some of the experts to discuss this issue. But first, Gary Foster Skelton took to the streets of Hamilton to find out how well protected the citizens are.
How do you protect yourself online? What kind of security do you use?
I have an antivirus installed and a firewall installed. Yeah, I do.
Only use secure pages and try to use very difficult passwords.
I use Norton.
We just bought software, but my husband put it on.
I think it's called Norton, something like that.
Any kind of virus killer or firewall?
Not really. I just use Apple.
No, not that I'm aware of.
I think my laptop has some sort of firewall on it as well.
We just use the standard McAfee.
I use something called Bitdefender.
Are you good at varying your passwords?
Oh, I got so many crazy passwords, it would blow your mind.
Yeah, I changed my passwords. Everything is different.
Passwords are changed every 6 to 8 weeks.
Pretty much use almost the same password every so often.
The same password on a lot of things?
Almost always. You know, can't let you know these secrets.
It's numbers, letters, and sometimes a symbol.
Like all weird gibberish words that make no sense, number combinations, oh yeah.
If they're too varied, then I can't remember them. I'm like, maybe this is the site where I put the capital M and the lowercase g.
Nowadays, like I said with the Apple thing, I just fingerprint everything, so it's safe for the most part.
Well, it seems that a number of people out there need to really step up their cybersecurity game. But you can take some solace in knowing that you are not alone, because there are businesses out there that need to do the same exact thing. You may remember that it was just a couple of weeks ago that international hotel group Marriott revealed that not only had the personal details of some 500 million people been exposed in a hack, but that hack itself carried on for some 4 years. And it's not alone. So in September, it was Facebook. And who can forget those 3 billion Yahoo accounts, which were also hacked. So this is what people on the ground here at the International Cyber Risk Management Conference are talking about. Cybersecurity, this could be a $6 trillion problem in the very near future. And help tease out those issues, I'm joined now by Anthony Belfiore. He's the Senior Vice President and Chief Security Officer at Aon, and also Noel Pierman, who's the Senior Vice President and Cyber Product Line Leader at XL Bermuda. Anthony, I want to start off by talking about that Marriott hack because it really threw the hotel industry into the spotlight. I don't think people probably realize how much data hotels actually keep on them, including their passport details. From an insurance perspective, which is worse? The fact that 500 million people's personal details were potentially stolen, or the fact that it carried on for 4 years?
Well, it's a double-edged sword there. I think a couple things. One, I believe that the biggest issue for Marriott right now is that, again, in today's world with the compliance and the regulatory environment we're dealing with on a global scale, specifically with the GDPR regulation that came out in in European Union, over the last 2.5 to 3 years it's been put into effect, generally speaking, they have a huge amount of upside and exposure. And that is something challenging for large multinationals to deal with. The punitive fines on that on the tail end can be in excess of 4% of global turnover. So that is significant, it is unprecedented, and this will really test the case law on that because there were definitely European citizens impacted by the breach.
One of the things that the latest reports that are coming out, Noel, is that perhaps there was Chinese hackers that were behind this, which have links to the Chinese government. This is nothing new because we saw with the NotPetya that it was linked to the Russian military. You had North Koreans were linked to that Sony hack a couple of years back. Teams are being formed with a specific goal of not just taking down companies, potentially governments as well. How is the risk profile for cybersecurity changing?
Well, it's changing rapidly. But I think it's high time now for us to no longer think of the hacker as only the 17-year-old in your basement, but also think of an apartment building on a campus full of people who are dedicated to hacking activities on behalf of nation states, fully resourced, well-educated. I think that's the kind of threats that we need to become more comfortable talking about and thinking about. So for the largest companies, those are the threat actors that they're concerned about.
The governments are increasingly becoming a concern, not just that these companies are going to be infiltrated, but also that these tangible assets, these very critical pieces of infrastructure could also be targeted. Banks, electricity grids. How can the insurance industry play a role in mitigating some of that risk?
I think the insurance industry it's been their core practice forever to help clients manage risk. And this is no different than anything from property to fire to D&O and E&O. Typically, what we are trying to do in helping our clients in this space is we are trying to give them a hedge. Right? It's impossible for companies to fix every hole, every gap in their armor, the defenses. You have to make educated operational risk decisions, but you have a finite amount of capital, a finite amount of people and cycles, and also a finite amount of time in a given year to get things done. So you have to make calculated, educated risk decisions. What insurance can do is help people with that residual risk tail. It can allow companies to say, hey, look, we're going to allocate this much capital to the problem. It's going to mitigate this much risk. We have this much tail. Let's go out and get an insurance product to help us hedge that risk.
But cyber risk is a bit different from other types of risks that are out there because it's constantly evolving. The financial fallout from it you don't really know the scale at which that could be. And it's becoming more and more frequent. So how much is this writing of policies, looking at the risk? How much is this guesswork?
There is more guesswork, of course, writing any new line of business. This was a lot of guesswork back when we started writing property policies, general liability policies 30 years ago. There was a lot of guesswork there. What we're able to do, though, is make educated guesses. We do have experience in other line of business that still help us. So, for instance, business interruption loss. We understand what that looks like from a property perspective if a building goes down, if a company shuts down. It's just a matter of transitioning some of those skills to more of a cyber liability context. And there's learning we have to do along the way, but it's no different from any other line of business that has grown from its nascent state into something much more mature. So,
what about how quickly the cyber risk evolves, though? Can you draw any parallels between any other lines?
No, I mean, look, that's the challenge. Look, we don't have 30 years of historical data to leverage to understand what your cyber risk posture is at a point in time. However, what we can do and what we've become much better at doing is cyber is a massively obtuse term. There are so many discrete risk conditions and cyber threat scenarios under that. So what we've gotten very good with in the industry over the last 2 years is actually decomposing the risk, linking it back to the operational risk of the client of what you're trying to cover. And to be honest with you, what Noel laid out there is the holy grail. Business interruption is really one of the biggest categories of what a cyber threat can actually impact, right? A DDoS, a ransomware attack. These are all forms of business interruption for large multinationals or even domestic companies. And so the challenge that we have here is really not a challenge of whether or not we can get them the insurance. It's a matter of parsing it down and contextualizing it so that it's effective insurance.
There's been an increase in the number of cloud service providers. So PwC calls this the supply chain hack, where basically you can be up to snuff as a business, but your supply chain may not be, and they can infiltrate you in that way, or going up into the cloud and spreading out malware to multiple people. I mean, how does this complicate things?
Well, that's definitely a risk. If you go back to the Target breach, which really kind of put this on the map for a lot of people, it was negligent management of vendor access that led to the entire company being hacked. So how companies manage their vendors is a big part of the underwriting process, a big part of talking to clients about what their risk is. And clients are growing in their ability. We started talking to clients about that years ago, and literally they're like, look, we have 10,000 vendors. We're still figuring out how to sort them all out and to limit their access to what they need in order to do their jobs. So it's been a growth process. So, which is also part of the good part of getting in early, talking with clients and watching them mature as the threats mature around them.
Do you think that the insurance industry, Anthony, is doing a good job in making it digestible for businesses to actually understand? Because for a lot of people, it's a very complicated issue.
I think historically, if we go back 5 to 6 years, no. I think in the last 2 years, we've made huge progress. I believe that we've started to quantify and qualify operational risk exposure just as that, operational risk exposure. We've put context around what does the cyber threat mean to our operational risk? What does it mean to us financially, reputationally, legally, contractually? And by putting it in these terms, it's a lot easier to link to business impact, right? ROI, cost avoidance, these are the terms that the boards want to understand. What does our residual risk posture look like over time? How can insurance help us hedge that risk? risk by cutting off some of that tail or giving us a hedge in it. And at the end of the day, the key piece here is that cyber, to your point, is infinitely complex. It's going to keep evolving, new threats. As new technology comes out, new threats are going to arise. So it really behooves us as an industry to boil this up or be able to distill it up and talk in terms at a macro level that makes sense to the business so they can manage the risk.
People that are sitting in the C-suite, businesses, they know that this risk is a big problem. But we see that a lot of companies still do not have a cyber strategy, still aren't buying insurance for it. Where is the disconnect? Why are we seeing that?
It's a great question. In my opinion, there are still a lot of organizations who think that their particular assets are not valuable, that no one is hacking them. Like, why would anyone be interested in my $1 billion to $5 billion business or my $500 million business? But doing that or talking that way about your business undervalues what you do and undervalues the data that you have and the access that you have in your markets. So there is always a bit of, do I really need this? There's also whether or not the risk reward is there. So I have an extra $1 million of budget. Should I hire 5 more security experts or should I buy an insurance policy? It's a very interesting discussion for clients to try and manage. So it's one of these things also, you talk to clients and they're in disparate industries, and even though they might see a big breach at a Target or at a Home Depot or at an Equifax, they think because I'm not doing those same businesses, that breach doesn't apply to me. So until I see someone that's much more similarly situated to me, like a direct competitor going through an issue, they struggle with quantifying exactly whether or not this is a good purchase or not. So that's part of the discussion that's happening. But we're seeing some of those discussions kind of close in terms of people realizing that if I have any computer network at all doing anything in my business, insurance can be a really solid tool in terms of mitigating that risk.
All right, we could talk about this for hours and hours, but we're going to have to leave it there. Thank you both very much for joining me, Anthony Belfiore and Noel Pearman. All right, time now for a quick break, but when we get back, artificial intelligence. It can make decisions faster and often more accurately than your average Joe or Jane. So what's it going to mean for jobs? I'm going to ask next.
New Toyota Rush, Bermuda's biggest SUV with 7 seats. There's always plenty of room. Available at Bermuda Motors.
From happy beginnings and life choices that we make along the way,
Colonial protects your lifestyle with the best insurance cover at the best possible price.
Health insurance with far-reaching benefits.
Family protection and long-term financial plans.
Business insurance and generous employee benefits.
For happy beginnings to happy ever after, visit CGIGroup.com.
Colonial, where people come first.
Welcome back to this special edition of The Breakdown. We are at the International Cyber Risk Management Conference here at the Hamilton Princess. Now, research paper after research paper shows that cybercrime is a leading business risk. Getting hacked is not just about losing data or money being stolen, because the reputational damage can bring down an entire organization. In this week's edition of His Take, ABIR CEO John Hoff tells us what role Bermuda's insurance industry can play in helping to mitigate this risk.
The cyber security line, cyber insurance, if you will, I think it's perfectly aligned with Bermuda's value proposition. The line is emerging, it's growing. Our strength of being very agile, being innovative, being responsive, it's perfect for Bermuda in cyber insurance. first in product development and the great talent in Bermuda. Very sophisticated companies, some of our largest are being engaged in cyber. This is not something to dabble in. It's a very complicated and very technical product. We also have some great skills at the Bermuda Monetary Authority. Aggregation is a significant area for cyber, making sure that companies have a full sense of how much they're writing, and whether that be affirmative cyber or standalone cyber, or even the silent cyber that may already be in their products. I think people are looking at a variety of different ways to transfer risk. But really the technical expertise required right now with cyber, I see it really staying with the traditional insurers because it's not as well known, it's still developing, changes are going to have to be made along the way. It also is very complementary, if you will, in a non-correlated fashion. So our bread and butter here in Bermuda is our natural catastrophe cover. At the same time, this could be a non-correlated risk, so may be a perfect match. Particularly with GDPR, there are some pretty hefty fines in there when there's a breach of personal data. And so that seems to be the trend where the world's going now, is making sure people have a say on where their personal data is used. Well, those fines may find themselves being covered under an insurance product. So that may be another area where Bermuda can engage, where we've had a history of that, where we've been covering punitive damages in some of our policies.
John Huff there, the CEO of ABEAR. Well, artificial intelligence, blockchain, you may think that these cutting-edge technologies, and quite honestly, very, very exciting technologies, have very little to do with the insurance sector, but you would be wrong. So experts say that blockchain alone could save the industry $10 billion. I have two great guests joining me right now to talk about this very issue. Tom Pagler, the Chief Security Officer at BitGo, and also Charles Dugas, the Head of Insurance Solutions at Element AI. Now, Tom, I want to start with you because BitGo offers security and custody solutions for blockchain-based currencies. So you think Bitcoin, but also a lot of other ones. In the first 9 months of this year, about $1 billion worth of cryptos were stolen from the exchanges. We're hearing about wallets being hacked all the time. How does BitGo provide security in this space?
I think it's important to know that BitGo was created to protect the cryptocurrencies in blockchain, as you said. We have over 100 tokens that we support. And what we did was Mike Belshie, our founder and CEO, created what's called multi-sig wallets. Multi-sig wallets are, you have a key and I have a key at BitGo, and there's a key in backup. And you use that in order to transfer your funds. So a bad person or a bad actor can't just go steal your single key from you and go steal your funds. What's important there is they would have to break it, steal your stuff, and then also compromise BitGo or go get the backup key. And the backup key is offline. And that's for the hot wallet. We also have custody that you mentioned. Mm-hmm. Custodial is that BitGo holds all the keys, like every type of custody there is, with keys that are sharded. It's split up. It's into separate chunks, and it takes so many BitGo employees to come together and reconstitute the keys in order to transfer the funds. So you can't just go compromise one person or one area.
So it's a divide and conquer the problem type of solutions, which seems very simple. Why has this not caught on sooner?
I think it's just because cryptocurrency was going fast, people trying to make it work, want to exchange. Security does slow some things down, so when you do this, it's going to be more steps, more stuff to do, which is what you want to do when you're securing the amount of assets you are in custodial. So that way you have really good administrative controls as well. So not only separate keys to get your funds, but administrators on the accounts, limits as to where it can go. If a wallet is compromised, it can only send to the wallet that you already own anyway. Lots of ways to really protect this and make it so this efficient currency can become something that we all use.
So Charles, you're working with another very exciting emerging technology. This is artificial intelligence. How is Element AI using this technology in the insurance space?
There are lots of applications of AI in insurance. Obviously, we've heard a lot about it. Typically, they cluster around 3 key applications. So engagement, so that's how you engage with your clients. So think of chatbots, for example, or recommender systems that are deployed on the digital platforms. The other very important type of application is around automation of processes. So that's, for example, automated document processing. And the third type of application is really around insights. So better insights, because AI will be able to leverage more complex data and extract information from that complex data, so that that enables better decision, more accurate.
But isn't AI at the end of the day just software, which means that it could also be hacked?
Yeah, technically it needs to be secured and protected as well as other assets. So this becomes part of your IP. The algorithms that were developed based off of your data. And so there certainly needs to be protection against adversarial attacks, for example, where people are trying to defeat your algorithms.
There is this global race taking place right now, not just between governments, but between companies, and this is the race for 5G. And what 5G is going to help with is the evolution and the adoption of Internet of Things. So machines talking to machines, and more machines coming online. How is that going to complicate things in the crypto space?
I don't think it's really going to complicate things in the crypto space. It's going to make it much easier for us, because what we want availability. We want people to transact anywhere in the world and move things faster. I think blockchain and crypto will actually complement that, because you're going to remove some of the friction that we have. The historic way that we make payments is based on paper. It's based on historic banks. And we've tried to make it technology, like bring technology to that, whereas blockchain is technology at its core and much quicker, faster, and I think it'll just help.
So even though there could be potentially billions of more entry points when it comes to hacking, you don't think that it will be?
I wouldn't be worried as long as you're following the process that I talked about. You make sure that you set everything up correctly. You use, as I described, the keys, and the keys are offline. These are not online. So you make sure that you're using something where you actually physically have to go get a device to be able to reconstitute and get to the funds. So it doesn't matter how much is online and how much more speed, because at the end of the day, you're using like a simple vault like we do in a bank.
So this potential Pandora's box of cyber threats that could be opened with 5G, do you think that AI gets caught up in that, or is it part of the solution to the problem?
Well, I think it's still part of the solution. First of all, 5G will enable a lot more services to be flowed through 5G, so there's going to be increased reliance on the networks and the connectivity. In terms of IoT, a big question in AI is whether you should look at edge computing versus cloud computing, right? Because if you channel too much data, that brings too much flow. And so 5G, although it does enable a lot more bandwidth, the growth of IoT devices is projected to be spectacular. So there's always this dilemma whether the AI should run in a cloud or on the edge, and that's a key question that we need to answer.
Can you just explain very briefly for people what the edge means?
So essentially, the device could send raw data in a massive flow, and then the algorithm would extract the information, the relevant information, so you don't need to send all of the entire raw data.
So IoT, as we mentioned, is going to bring a lot more computers, machines online. The cyber space has always struggled with talent, filling talent, and the Harvard Business Review says that come 2020, there's going to be 1.5 million unfilled positions. How is that talent crunch going to impact small island nations like Bermuda?
Well, I think you're right. We have a talent, not as many people going into cyber as we need right now, but there's a lot of universities that are putting cyber programs together. Carnegie Mellon's one, Stanford's doing it, Harvard's actually doing it, MIT's doing it. So I think that we're going to see more and more people actually come in with those degrees. I think that small islands like Bermuda, who have such an insurance presence and are such a key player in the cyber world and cyber insurance, will actually attract some of that talent, because it's going to be where the job is. It's going to be where you can get in front of these issues coming up, like IoT explosion, right? How are we going to ensure devices that we go more online, especially if security should be put in these devices before they go online. They could be areas of attack. So I think there's going to be jobs that come available, and when people are in school, they're going to realize, oh, I want to go into this because there are jobs here, and I will go to these islands that specialize in this because there's a way for me to build a career here.
But overall, do you think AI and blockchain are job killers or job creators?
It'll be a job changer for sure. It'll definitely redefine some of the jobs. Some of them will disappear, but will create new jobs. So
Will it be equal at the end of the day, or is it going to be more loss than gain?
I can't tell. There's been revolutions over and over. There's less farmers today than they were a couple of centuries ago, obviously. So there's still new jobs. Job will change for sure. What we're developing as tools is to provide software tools that support the decision making in the SOC, for example, and in different areas of the insurance company, so that people, rather than processing simple cases, are being presented with cases that are complex, and then they also are tasked with training or correcting the AI, so that they have an important role into developing and enhancing the intelligence of their company.
I think in the beginning, as this is all new, we're going to see an increase in jobs, because you're still going to be doing some of the old stuff you're doing. New sectors will be coming, but people have to get in there, train the AI as was described, understand the blockchain, get the stuff moving. So I think we'll see an increase in jobs for a while, and then it might level off, and then as was said earlier, we'll see a change in the type of job there is, but I think it'll at least remain the same.
Before we wrap up here, Tom, I want to ask you one more question, and that is about Fidelity, which has launched a digital asset service, which is a separate company that's going to be handling these crypto transactions and custody services for institutional investors. As we see more of these traditional long legacy banks come into this space, how can a company like BitGo compete against them?
Oh, I think it's great that they're in the market, because what we want at BitGo is legitimacy to the market. In the banking space, it's not really competition. Like, I'm going to take your customer. Like if you're running software or something, every customer I get from you is a customer lost from someone else. A lot of banks choose multiple people for custody purposes, because it's actually safer. You don't want to put all your money in one area. You want it in multiple areas, because you can get it to it if there's an issue. What if somebody has an issue? So the more that come into the space, more legitimate the space is, it's great for us. We're really excited about it.
All right, thank you guys very much for joining us tonight. Charles Dugas from Element AI and Tom Pagler from BitGo. All right, we're going to head off for a quick break, but when we get back, a roundup of some business news making headlines tonight.
Win a trip or two to the 2019 Trinidad Carnival. When you purchase a car from Bermuda Motors, your name will be entered into a draw for a chance to win an all-expenses-paid trip for two, including flights, accommodation, and tickets to the Trinidad Carnival. Visit Bermuda Motors on Church Street or bermudamotors.bm.
Oh dear. If you're unsure where the trail leads, you're on the right path. Go to Bermuda.com.
Ever wondered what smart health insurance feels like?
Colonial's 24/7 worldwide health insurance does most of the thinking for you.
1,500 CGI health claims are settled daily.
60% of claims settled automatically.
You can access your health plan almost anywhere, anytime.
And have smart wellness with online data tracking.
And more provider choices for you and the people who matter most.
Premier Health is smart health insurance, and it feels good.
Colonial, where people come first.
Welcome back to The Breakdown. Time now to get you caught up in some business news making international headlines in tonight's edition of Quick Take.
The European Central Bank has called time on a 2.6 trillion euro stimulus program, despite issuing a warning over the potential for weaker growth. ECB President Mario Draghi said net purchases into the bond buying scheme will end this month, but that the bank will reinvest the money from bonds as they mature. He also cautioned that protectionism and political uncertainty could put downward pressure on the Eurozone's recovery. The QE program started nearly 4 years ago as a way to stimulate growth in the Eurozone. Virgin Galactic is one step closer to space tourism. The company successfully sent 2 pilots and a mannequin named Annie into space this morning. The airplane-like Spaceship 2 was launched from California, hit 50 miles above Earth, then separated from its mothership. That's when the rocket thrusters kicked in, shooting the ship to a top speed of 2.9 Mach. That's 2.9 times the speed of sound. The ship hit a top altitude of 51.4 miles above Earth before safely returning to California. Virgin Galactic owner Sir Richard Branson hopes to send paying customers to space as soon as next year. More than 600 people have already thrown down cash, including Leonardo DiCaprio and Justin Bieber. A 90-minute flight will set you back $250,000.
That's going to do it for this special edition of The Breakdown. I hope you enjoyed coming on the road with us. We're going to be back next week, same time, same place. I hope to see you then. Take care.